Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. A little bit later than I thought I was. Just got the initial jobless claims. Hold on a second here. What do we got? U.S. initial jobless claims 187K versus an expected 205. And so you did see a little bit of selling in the treasuries because of that. But U.S. Philly Fed Business Index negative 10.6 versus an expected negative 6.7. So we continue to get, like, I think what they call this is soft data that says, hey, the economy is in trouble. But right now, the market is more concerned about higher interest rates. Let's come and look at the, well, I don't know what you mean by feeling better. I mean, physically, I feel pretty just normal. ZN. So here you can see we did have a little bit of a pullback from, the lows yesterday. But we're pushing down now. So again, once we get below the kind of like the 08-ish area, things start to get a little bit hairy in the treasuries. So ES is having a bit of a rally, trying to climb back some of those losses from the day before. Oil still mixed. It was, I would say, mostly bullish yesterday, but it's within the range. So gold and silver. Well, silver may be hurting here. Kappa still in a long, slow downtrend. The dollar, well, the dollar still looks strong, but it hasn't been like too crazy, right? 103.18 right now. And then Bitcoin's still just kind of going sideways since the ETFs. What happened yesterday, 2 hours after you ended your stream? The treasuries spiked down and the liquidity was pulled before the event. Yeah, that was the auction. There was like a bill auction, It wasn't that big of a deal, was it? Let's see here. That would have been at 9 o'clock my time. It's a little bit of a buy from it, but nothing too crazy. I worked a little bit. I was a little bit deeper into the code yesterday, so I didn't get to see as much of the markets as I would maybe like. Which, by the way, for today, I do have another meeting, early morning meeting at 7 o'clock. I've kind of been wondering what would happen if we had a more extended period of Seth doesn't talk as much and share his opinions and keeps what goes on the stream strictly to questions that people ask and important information. And we keep out the entertainment. It was funny because yesterday I was talking about, like, what if we just tried to make this as entertaining as possible? But I'm finding myself having to do things in the morning more and more, and I'm totally okay with that. And it seems like you guys are fine, and when something happens, I'm still able to talk about it. So, but it will be like that. I got a meeting in about 30 minutes. Well, they definitely sold on that initial jobless claims. You're getting a pretty decent pullback so far. this is not behaving like, oh man, breakout time, sell all the things, but it could still happen, right? You couldn't find it scheduled in your economic calendar. So sometimes the more what would you say, the smaller bill auctions are not necessarily listed on your economic calendar. So for me, with financial juice, those are always on there. But the best way to find out about these things is to go to the source and go to treasurydirect.gov. And at treasurydirect.gov, you can scroll down here. And let's see here, I think. Yeah, they're always changing things, but upcoming auctions. There we go. And then we get to see what's going on. So today is the 18th, right? Yep. So we got a 26-week and a 52-week bill auction coming up. Interesting that they do not list the time, but I can see it over here. It is at 11:30 Eastern time. I think if you click on it, no? When auctions happen, schedules. I feel like the Treasury Direct website has gotten worse. Okay, but it's usually the way that it works is the smaller ones, like especially when you've got like two of them on the same day, you get like one at 11:30 and another one at 1 Eastern time. So, and because of all of the issues around refunding and all of that, you are seeing more volatility around auctions than you did in the past. And you kind of are starting to see this trend, I think you could say, where certain auctions do really well and certain other auctions do very poorly. Let's see here. Does a T-bill ladder is a good investment opportunity? So I don't know a whole lot about the statistical properties of those kind of treasury strategies. I can tell you these are not strategies that are going to make you, 60% in 1 year or something like that. They're much more conservative strategies, but banks do make money from them. So there is a group of people where it really makes sense for them, and it would be up to you to determine if that, investigating it and what the returns look like to see if it's appropriate for you. Well, one yesterday really spiked. I mean, I would say that it wasn't the biggest one we've seen recently, but we have Lagarde at 10:15. Yeah, so I don't think I've been doing super good at keeping track of like who's speaking and what's going on later in the session lately. So I need to do better with that. We got Lagarde speaking at 8:15 my time, so about 2 hours from now. And then we've got Bostic. And then we've got the auctions. Well, they've got a bunch of auctions. There's a 4-week bill auction, but then there's also a 10-year tips. So, one thing that I don't get from Financial Juice is like, if somebody's going to be speaking, what is the deal, right? Like, where are they speaking? Why are they speaking? So, let's see here. Oh, and so we do have unemployment. Oh, yeah, okay. My calendar is just off in terms of the time here. Due to participate in a panel discussion titled Uniting Europe's Markets at the World Economic Forum in Davos. So that could be significant. And then I don't have... Oh, there it is right there. Bostic. Due to speak about the economic outlook at the Atlanta Business Chronicle 2024 luncheon. So that one would not be like a huge event, but he is going to talk about the economic outlook, so that will be important. By the way, I would pay attention to the stuff that's coming out of Davos. I mean, a lot of what comes out of the World Economic Forum is really stupid. You got to realize that it is a, quote, forum, okay? So it is basically a convention for billionaires, right? And I think that a lot of people in the conspiracy theory world kind of make this assertion that Davos is where they tell us what they have in, like, this is what the plan is, sort of a thing. But it's individual people, right? So you have an individual person get on stage at Davos and share their opinion, and then maybe other elites like it and jump on board, or who knows what, right? Like, yeah, it's like Comic-Con for billionaires, yeah. Okay, so a lot of what you see at Davos can give you insight into what prominent world leaders are thinking about certain things. Okay. So if you see a presentation like 5-minute cities, that doesn't mean that the plan now is to implement 5-minute cities across. It just means that one person maybe wants to implement 5-minute cities. But why would they want to do that? And what are their reasons behind doing that? And why are they thinking in that direction? That can be useful information for you. And the one thing that I saw yesterday that I think was the most important coming out of Davos was that the president of JP Morgan, Jamie Dimon, was interviewed. I think it was by CNBC before, well, not before, but it was just an interview on TV. And he kind of eviscerated the Democrat Party for, basically saying that all of this antagonism towards Donald Trump, and especially towards Donald Trump supporters, because it's really come into like, if you vote for Donald Trump, then you must be a fascist. That's the line that the Democrat Party is trying to play, right? And he criticized that and basically said that that's going to hurt Biden's campaign. Like, you can't, well, it's kind of funny. You can't attack people and despise them and make it obvious and then expect them to vote for you. I think the Democrat Party thinks that they don't need those votes, that demographics is destiny, and that all of the demographics are in their favor, and so at this point they can just be open about what they're doing. But from what we're looking at, it kind of seems to me like Jamie Dimon is saying Donald Trump is probably going to be president, and you guys need to start preparing yourself for that and stop being stupid. And he also was saying, a lot of the policies he was absolutely right on. And I think the biggest one is probably immigration. Immigration in this country is really coming into a tipping point where it is negatively affecting enough people that maybe Congress actually does something about it. We'll see. Okay, would it be hard to program all of the indicators / studies in your suite over to Sierra? So yes and no. I can definitely do it. It would be a little bit of work. It would be probably several weeks worth of work to get it in. And I think one of the biggest challenges that I have in that sort of situation is like testing it. Because, I use NinjaTrader every day and I'm using these indicators every day. So by the time you guys get them through my NinjaTrader 8 paid suite, it's already been well tested. I know that it's not going to crash on you or do anything stupid, right? With Sierra charts, how do I test it and make sure that it's really solid? Especially since you have to program it in C++, right? Which means that there's a lot more room for error, or there's a lot more room for me to make mistakes, rather. But I looked at that yesterday because, you guys have been asking me about it, and you brought it up when we were talking about, what are some different directions we can possibly, what are some things that you would like to see during the stream that you're not necessarily seeing? And that came up, even though that's not like what we do during the stream, but it was still a good idea. So I looked at it, and the biggest problem that I have right now with doing it is that I don't use Sierra charts, right? So, and I'm not going to go and just buy and pay for Sierra charts every month just so that I can do the development on it. You know what I mean? So I think that if I wanted to get into developing it, I would need to, have some sort of a deal with them, basically, them give me a copy of Sierra charts specifically so that I can do the development with it. And I don't know if they would do that. Sierra has a friendly support staff if you need help. Yeah, I just kind of like... I don't have any vendetta against Sierra charts or any of the people over there, okay? I don't really know them. My experience with the platform is very limited. Like, I've gone in, I've used it for like a week. I'm familiar with it and everything, enough to be able to give people recommendations on which platforms are appropriate for them. If you don't want to go with Jigsaw, probably Sierra charts is the next closest to analog, right? It's not as good as, sorry, did I say NinjaTrader or did I say Jigsaw? If you don't want Jigsaw, Sierra charts is the next biggest competitor. I think that Sierra charts is a tier down from that, but it's a good option for a lot of people. They don't want to do Jigsaw. But like, that's about the extent of my experience with it. I have written an indicator in Sierra charts and my order flow indicators in Sierra charts. So I know that it can be done, and I know that like we have everything that we would need to translate this over. It is just a question of me getting a copy. But anyways, the reason why he's laughing is because there's been a couple of posts on the Sierra charts forums that we've kind of been laughing at, that where it seems to me that the people that are running things at Sierra charts are very, very how do I put this? They're libertarians. They're as libertarian as they come. And there's been a couple of posts on the forum that kind of make me wonder what's going on in their heads, like saying that they can't implement certain features because like the world is going to be blown up soon anyways and stuff like that, right? So I don't know if I could have the same kind of relationship that I do with Jigsaw with Sierra charts, but I'm willing to try. I'm willing to try. So if you have ideas about we want to do that. I've kind of been looking at it though. I honestly I have mixed feelings on it, because it does seem like if we want to make money, and frankly, if we want to help the most amount of traders, probably the best thing I can do right now is get the indicators on Sierra charts, because enough of my audience uses Sierra charts that it would make a difference, right? But the things that I'm most interested in and that I want to spend my time programming right now is in other places. I have this server that I've been slowly building out. I have a server that I'm building out, so I'm kind of doing work on that side. I am trying to create my own sort of platform for me to do the testing of longer term strategies, like momentum strategies and so forth. Like I can kind of do it in NinjaTrader, but there's some deficiencies in that. So I think that what I want to have is a system in Python where I can kind of use these workbooks and run it on my Kubernetes instance and do all that sort of stuff, right? So I want to do that. And there also is some like NinjaTrader programming sort of stuff that I want to do more with. So I would buy them. If it was like, if Sierra Charts was like you buy one time sort of a thing, and then I could connect it to any platform that I wanted, then I would totally do it. But it is a monthly cost, and I don't want to add another monthly cost right now. So I would have to talk with them or work with maybe a broker. Maybe the guys at EdgeClear could help me out. I could also make it on EdgeClear's platform. I would really, I think that would help too, because I really like them as a broker. I would like to promote them more. I don't think I've ever met, I tell you what, no, I have. There has been some people I've met within the industry platforms and stuff that I've worked with that I was like, I don't think I want to work with you again. But the brokers have all been great. But EdgeClear in particular, I feel like they are they understand what the deal is. Because listen, retail trading sucks. Like, that's just the reality of it, is that most retail traders lose everything that they put in. Futures trading is particularly difficult. You're competing against the pros, and you're probably going to lose money. And so in a situation like that, it's really easy for platforms and so on and so forth to be like, well, obviously we can't make money from trading it, so we're going to just try and suck dry everybody that's trying. And there are definitely people out there that do that. There are some of these funded trader programs out there that I really feel are like, let's just kind of suck these guys dry, to take them for all they're worth, as much as they'll give us, right? But I think that EdgeClear really understands the game and is doing its best to provide, be a good broker that allows people to do this responsibly. And so I really, really like them. And they do have that platform, and I could make stuff on that platform. Now, another roadblock to doing this is that for licensing, I believe that I would have to write my own licensing into this Sierra Charts version. So, I don't know. Kind of the thing is that maybe now is not the time. I don't know. You guys can help me, right? If you have any ideas or people, you can hook me up with some people that might be able to help us get free access to it to do development. But one of the things is that I don't make as much from the NinjaTrader indicators as I probably should. I really feel that I have an indicator suite that is valuable to everybody, and it's a good price. So I feel that everybody that uses NinjaTrader should buy my indicator suite. But I'm not advertising it enough. I'm not pushing it hard enough to get to that point. So I need to do some work to try and promote that a little bit better. I'm not quite sure. Every time that I go and I try and make videos about it, I feel like they end up being really boring and it just kind of falls flat on its face. But we can work it out. Would really like to do a webinar with NinjaTrader. I also, last night, I had some ideas about some additional indicators that I think would be very, very valuable and would give us some insight into what's going on in the markets that we don't have right now. For instance, I don't have anything that really goes into what the term structure of an individual future is. So, for instance, there's the front month. We're trading always on the front month, but then there are also other back months that you can trade. They're a lot less liquid, but there are kind of like these different sort of patterns that you'll see in the curve where over time it will be higher or over time it will be lower. And what does that kind of mean for the markets? And we don't have anything that shows us that. I could go and pull up a chart and add the back month, right? But so I've seen, because I've been reading about momentum strategies, and one of the momentum strategies that I saw was look at the term structure of a future, and if the annual interest rate from that difference, so like if you take the difference between this month and next month, and then you times that by 12, what is that in a percentage? And if that percentage is over a certain amount, then you take a trade, right? So we don't have any ways of looking at that with NinjaTrader very well, and we should have some indicators that do that. And I have these indicators that show you the yield curve, so I can kind of, modify that to show us that sort of stuff. Say if you could monetize your rants, you really go on and on about anything and nothing. I don't know, man. I wonder. There's no way for me to really know, but I wonder, does me sharing my opinion and stuff help or hurt me? Especially if I talk about political things. There are going to be some people that don't share my politics, and so they don't want to hear it, and then they leave. Or is it just that, what we're doing is very, very niche. There's only a certain number of people that want to watch it, etc., etc. That's how I was saying, what if I was just really, really quiet for a week, right? And how would that affect the channel numbers? Would it go up or down? Because it seems like I get to 30 no matter what. And so then what I could do is I could take the rants and I could edit them into videos and put that on YouTube. But, that would be extra work that I don't really feel like I have time for. That would be beyond my ability to do right now. I think one of my issues is when I'm thinking about actually picking up projects. So I'm more interested in how do I make the stream better right now. Well, when it comes to projects, a project that basically involves more effort by me every day is probably not something that I can pull right now. Unless I had a video editor that was willing to go in on it with me. I would 100% be willing to do profit sharing with an editor if there was somebody dedicated. They probably would help if they were local too, though. Okay, so I don't want to get too far off here because I do need to jump into a meeting here in a minute. But somebody asked, why is it being so aggressive here? I don't know if what we're seeing right now is too unusual, but just keep in mind that we are right on the edge of a pretty critical level. So I always say, because I'm very anti-technical analysis, you can't come in and say a breach of this level means that we're likely to continue moving down or something to that effect, okay? But there are strategies that will use that sort of a thing as a trigger or a filter. So you are going to see different behavior from the markets. You need to keep it in mind. Let me come back over here to like a daily chart. So one of the things that you can see on my daily chart is the ATR stop. And what this is essentially doing is it's saying, what is a 3 standard deviation pullback from the highs, from the most recent highs. That's what this dotted line is. So you can see we're like right on the edge of it. So this is a point where, first of all, if we breach that low right there, that I guess it's at 06, okay, then that will trigger some momentum strategies, right? But this pullback is this is like the standard pullback wherein you might also see mean reversion. So like if this is a, we're moving up, we're going to pull back and then eventually move higher sort of a thing, right? This is about the area where you're going to start to see it shift. And especially since it's a buy, you're going to see mean reversion strategies try and buy it here, right? Why 3 and not 2? I don't know. That just seems to be the number that works, and it works across multiple assets. Anyways, so this is critical, right? We're at a critical point. I don't know which way it's going to go, but there is a point at which they get far enough down that you could just start to see it like really accelerate. You use the summary tape? Not really. The summary tape is kind of built to be like if you wanted to read order flow like the way that they did in the 1920s and use the summary tape. I don't use it. Okay, guys, I got to go quiet here for a little bit. How do you handle when you need to be easily? I just don't say anything. And I pay attention to the meeting that I'm looking at. I usually don't have to say too much because I'm kind of new, but I really do need to pay attention and try and absorb as much of what they're saying as I can. light and good screen recorder that doesn't interfere with performance. Okay, so I think that the key thing here is that the thing that takes the most processing power is the encoding. So if you have a new video card, that would mean a 1660, a GeForce 1660. The 16 at the beginning kind of says that they have this newer architecture in it. Or you have like a 30 series card or a 40 series card. Those have an encoder built into the video card so that you can encode and record without it having very much impact on your performance. And so from there, OBS will use some CPU, but as long as you don't have a whole lot on your screen, like if you're just recording the desktop and you don't add anything else to your scene, then it's going to hardly take up any processing power. Oh, so you have a 3070, then you should be good. So let me show you real quick. Here's the settings. And when you go to your output, there's these encoder settings, and you want to be using one of the NVIDIA encoders that are on the video card, like the NVENC. And then just record one screen, and it shouldn't have much impact on your performance at all. Not with a 3070. In fact, so you can come over and look at it. Here's my GPU. And you can see it's using the video encoder. So I'm not even using half of my video encoder. I could be saving and recording the whole stream and saving it to my disk. Actually, I was doing that before. I could probably turn that back on. Okay, so if your issue is that the quality that you get out of it isn't very good, then you just need to change your bitrate. Change your bitrate. You know, the higher the bitrate is, the more space it's going to take on your disk. Yeah, the numbers aren't clear enough. Just increase your bitrate. I bet you that you're starting out with it like at 1 or 2 kbps, but you change it to 5,000, you should be able to see it pretty good. And if you really want it clear, you set it up to something like 10,000. Pretty decent pullback. It really does look like the mean reversion traders are coming in. Kind of thought that it would be more of a breach and momentum trade, but it really looks like mean reversion traders are coming in. Like they caught and bought it. Camtasia causing that is kind of weird. I don't know. Make sure you have like open up the task manager and check and see like how much is the video encode using and how much CPU and stuff like that. Candy can. I'm really quite surprised that there are like these other competing software suites outside of OBS that have any kind of following it, because OBS has just become so dominant and it's free and it's open source that like it's really crazy that competitors can keep themselves afloat. He saved 300 terabytes of it. That's crazy, dude. I will store like about a month's worth on my disk and then I delete them if I don't use it. Hi, good morning, Brando. I'm watching a job training at the moment, so I'm being a little quiet for the next 30 minutes or so. We're at 18 right now. I don't know, not talking has kind of hurt the viewership today. We are talking about, okay, if I kept things more informational, would that help or hurt the stream? Oh man, I hope you guys couldn't see that. I coughed up a loogie and had a hard time finding it and found it on my arm. uh. That last little move up was kind of aggressive. I wonder if the people that were trying to go short in the hopes that some momentum would start picking up are puking now. Man, it's after a pretty strong pullback and what I thought was stop runs and everything, they sure did turn right back down really quickly, didn't they? There's still a lot of fight. This is still kind of doing the behavior that I've found very challenging. Think ZB is going to go for new lows here? Trying to sort out if this movement is related in any way to the dollar, and there does seem to be some correlation, but it's a little messy. I'm still a little skeptical that they'll actually be able to turn into full-on downside momentum here today. Maybe if we end the day down here and open up tomorrow below 06, then we could start to get like a real momentum day. But right now, I still kind of am seeing mean reversion flows. So, define lag. You're stuttering? Or just like delayed input? And when you pull up like your system metrics, delayed input. So when you pull up your like task manager, what are you seeing for CPU usage and memory and so forth? Have you seen a problem with NinjaTrader 8 Strategy Analyzer where the optimization results change after restarting NinjaTrader 8? Any hints? I do use the optimizer from time to time. So what, let me see if I understand what you're saying. Are you saying that I come in and I have the strategy analyzer open and then I close NinjaTrader and start it back up and that strategy analyzer window is still there, but the results that I get are different this time? Yes. Okay. So something that I have had noticed happens to me sometimes, and maybe this is what you're seeing, is that the data provider like changes after market. So like if I try running a back test on the weekend or like after the market close, sometimes the data that it gives me is different. Seemingly different. So if it runs it a second time, then I get like slightly different results. Could be something like that. But then the other thing is like, okay, if I run it, if I run it today and then I run it a day later, does it change? And another thing would be, you can right click and there's a show log, and it put this little window here at the bottom. And I have this little window at the bottom, and it will tell you like every time that you've run it, what was the results and what were the parameters that you passed into it, right? So you can see here, well, this is a huge mess because I was backtesting my vote strategy. Do I have the best one? Yeah, so I can come in and I can remove all non-pinned. So now you kind of get an idea of how well these strategies do by Sharpe ratio. Only the results on the top change after a restart. That is weird. But then if you completely rerun the optimization run, then what does it do? So I guess the thing that I'm trying to understand is it just when it's trying to pull up a memory about the last time that you ran it that it displays incorrectly? Or does it display differently after you run the optimization run? Or did it run the optimization run another time when you started it back up? The data in the performance windows change after restart. So if that happens, then when you rerun the strategy, does that then change it back to the original data that you had? Or like you run the optimization run, you restart NinjaTrader, the numbers are different, then I click the run button again. When I do the run button, it goes back to the normal numbers until I restart, and then it would be screwed up again. Yes, but only until restart. Yes, okay. So that is weird. So when you open up the log, do you see those changes in the log down here too? Not in the log. That's interesting. I don't know about that. I can't explain that one. They may have found a genuine bug to show to NinjaTrader. Oh, they say that there is a bug about this, huh? I've never experienced that problem, but I don't really... I usually close the window down before I, you know, I don't leave the strategy analyzer window up between restarts of NinjaTrader, you know? I do the work on it and then I'm done, I close it. But then the other thing is you should be able to double click the strategy in the log to see it pop up over there and still look at it. Do you offer coaching? No, but you can come and message me on Discord anytime. And I can even do a screen share if it's necessary. Well, he did kind of imply that it was a bug at the very beginning. So it was pretty much like assumed it was a bug, and it's like, do you know anything about this? I mean, when I click on an optimization run, for instance, it doesn't... Yeah, I don't know. You come in and I'll look at the numbers on this. It looks just so amazing, doesn't it? Oh, it had to do with is instantiated on each optimization. Aha. So is it because you are trying to say is instantiated on each optimization false? And then your strategy doesn't actually handle that correctly, and there's some strange difference between when it pulls it up and whatnot that causes that? I usually don't have is instantiated on each optimization as false. But, it kind of depends on, that's one of those things that, like, when things are really getting slow, then maybe I go and I take a look at that, right? But usually, having the save history of, so in my strategies, I've added this property that sets the save history. Because one of the things that really kills you is all of the memory that it takes up running thousands of optimization runs. It tries to save all of the trades and all of the information in memory. And what is better to do is to just not save the history, do the optimization run, and then once you have certain optimizations that you want to take a look at, you can rerun those individual optimizations and turn the save history back to true. And then, right? And that makes things so much faster, because when you're not running into the memory, it's like once you run into the memory limitations, it just like slows to a crawl. Close this so we can see what's going on. Well, not very much is going on. It looks like, well, they're kind of slowly but surely moving back up a little bit, but it kind of looks like you just got a distribution somewhere around 11 to 12 that they're just hanging out in. We do have more numbers today, don't we? No, that's not. Oh, yes. The ECB president is in 15 minutes. Yeah. So you should be able to just, double click on my name and start sending messages. I don't talk to as many people as I used to, simply because they changed the message request system. Oh, yeah. I'm sure there are many fake speculators. Yeah. I highly recommend in Discord to just turn off, messaging from non-friends or whatever. Like, you can send me a message. It should just let you through. But then, although I've had some issues, I don't know. Here's a message request somebody sent me this morning, so it must be working correctly. I don't know. But the other day I had somebody, they said, no, it won't let me message you. You have to add me as a friend first. Maybe it's a two-way setting. Maybe the setting in Discord, if you set it to that, it also means that you can't message people until you've added them as friends or something. I don't know. Okay, well, that means not happening. I am done, so I can chat a little bit more. Let's read what Zero Hedge said about the whole soft landing thing. Initial jobless claims plunges near 54-year low. The number of Americans filing for jobless claims for the first time plunged to just 187,000 Americans in the week ending January 13th. That's the lowest since September of 2022. And the second lowest since May of 1969. New York seems responsible for the huge decline in claims last week, while California saw an increase in claims. Wow, yeah, it was a huge change in claims in New York. Continuing claims also continued to trend lower, hovering just above 1.8 million Americans. And just like that, the Goldilocks dream of a soft landing was destroyed. How does the Fed justify rate cuts when the labor market is the best in over 50 years? You can't. I don't see how you do that. I don't see how you cut rates. Maybe you just leave them where they are, but I don't see how you cut rates. That does sound awfully crazy. Okay. Manufacturing activity in the Philadelphia region continued to decline in January. The headline Philly Fed survey printed negative 10.6, and apart from the insane outlier spike in August, this indicator seems to be screaming recession. More worrying is the fact that hope appears to be dwindling fast as the 6-month forecast for the survey plunged back into contraction. Philly Fed's demise is consistent with the collapse of hope as soft survey data has slumped in the last month, back to its weakest since July. On the bright side for the Doves, the disinflationary trend remains intact as prices paid and prices received both plunged in January. However, we highlight the fact that the Philly business expected price pressure to return in the next 6 months. Overall, the bad news in this report should buoy stocks and bonds. Lower inflation and lower growth enables sooner and faster cuts. But will it actually? Yes, Zero Hedge is comment on that. It is kind of like contradictory data, right? That, like, on one side, it's like the labor market looks really strong, but then everything else from a soft survey standpoint seems like maybe a recession is happening. Wouldn't it be weird if we had a recession that wasn't really accompanied by job market weakness? Do you think that that could happen? Well, Zen is getting up there. The last swing high was 14.5. I suppose I could clear up above us. 1 in 4 CEOs planning to replace workers with artificial intelligence this year, according to a recent poll. Sure. And then you probably hire more people, and just in different areas. I know, it's kind of funny because there are a lot of people that are like, doesn't it seem like there's lots of layoffs and stuff like that right now? But it doesn't seem like that's actually like thing. Have you ever thought about leaving the States? Doesn't look too good. Same here in Europe. You are free as a trader. You can find a nice place. I don't really see the point in that. Things aren't that bad. I think that we have a tendency to, lean towards the negative and think that like everything's going to go to shit and we have to get out of here now, sort of a thing. But I don't think I would want to do that. Especially not with where I live and everything. I don't have some of those same problems. Maybe if I lived in a Democrat city, I would be like, I gotta get out of here. But nobody bothers me here in Utah. Can't believe someone would think things are bad in the US and better somewhere else. Well, yeah, so like, would I be moving to Switzerland? It seems to me like that if I was to move to Europe, that Switzerland would be the place for me, right? Because I want to still be in a place where there's skiing is available, and it has, values freedom is maybe a little bit more conservative. So I think the best match for me would be Switzerland, right? Every time we've had this conversation this isn't the first time we've had this conversation on the stream. Don't come, it has changed a lot. Man, I think that. So you gotta realize, we live in an interesting time, right? Like, this is some of the most important macroeconomic times since the 1940s, like the post-World War II era. You're seeing that. I mean, they were starting to make the shift. It's really weird how this kind of all played out, because like it used to be globalism everything. We need to globalize all the things, free trade, that brings prosperity, and so we want as much globalism as possible. And that whole time there was these people saying, well, globalism isn't necessarily good for me. And there's kind of like this middle class and working class people in the United States that have been hollowed out, that were just kind of ignored for a long time. And then Donald Trump came along and said, actually, we shouldn't globalize all the things. We should prioritize America first. And, you know, the globalists hated that. And it was a large part behind why Donald Trump was so controversial, right? Well, the thing that's funny is that at the end of Donald Trump's term, after having fought the deglobalization sort of political movement through all of Trump's presidency, in the last year or so of the presidency, all of a sudden, the establishment said, you know what? I think we're actually wrong. I think that globalism is on its way out and we need to shift now. It was like really fast. It was like, I remember reading one story about it, and that was like all I really saw in the media, but like you can see the change has been taking place. I don't see that many. It's kind of weird because like we all know it's happening, but I don't remember reading lots of stories talking about this change or any of that. But you know, it kind of started there towards the end of Donald Trump's term. And then COVID hit, and COVID really accelerated that, right? All of the sudden, they said, you know, globalize everything cannot always be the answer, because that exposes us to significant risks. And we're not sure if we can keep the you know, global system going the way that it was. There's disruption to trade, like this, you know, this thing in the Red Sea is like a great example of where it's like, you know, what if you were completely dependent on that trade route for your imports? You'd be absolutely screwed. What if China decided to start doing stuff in the South China Sea? It would be like a huge problem. So, you know, just all of a sudden they said, you know, free trade is a good thing, but maybe we shouldn't globalize all the things, right? And now, fast forward, like what, 4 years? Yesterday there was, you know, a thing at you know, there was like a fireside chat sort of a thing, interview sort of a thing going on at Davos. They were outright talking about this. They're just like, you know, there's like a new world order coming in, and like, where do we fit? It was kind of funny because I saw people on Reddit posting it, like saying, see, look, they are pushing for a global new world order, when really what they were saying is that like the world has changed and we, the World Economic Forum, were wrong. And are we like even relevant now? Where do we fit in this new paradigm if globalism is on the wane, right? It's just a wild thing. And so when you're having that degree of change in the world, you're going to see pressures all over the place, right? And I think that when you're seeing change, that a lot of our biology is kind of primed to get really negative and think like, I might need to, you know, I might need to get my backpack ready to go and live in the woods, or, that sort of crazy stuff. But that's usually not how it works. And for the people that are informed and are really willing to work hard and adjust to the changing circumstances, you can really strongly benefit in those kinds of situations, right? So I don't think now is the time to get too pessimistic. I am concerned that there could be a recession on the way, though. I'm just seeing all of the things that would typically tell me that we're going into a recession. I'm seeing, and like everybody's just says that's not actually going to happen. But I'm like, well, they always deny it when we're going into a recession, though. Like, so that doesn't comfort me. You just remind me, we were talking about this a little bit earlier, but like Sierra charts, there's been a couple of instances on the Sierra charts forums where like people are requesting new features and stuff, and the developers are post and are like, we don't have time to support this feature because the world is about to be destroyed by ballistic warfare here in a few months anyways, and I don't want to waste it writing this particular feature. It's like, what? That is like just the craziest left field response to here's a feature that we need to trade in Europe or something like that. It's just like really wild. But and it's a really bizarre thing for somebody to be like taking in their business. But there are a lot of people out there that kind of feel that way right now. I think that they're always out there, and the internet has kind of amplified them, right? Well, I would say that the 10-year treasury here is being a little volatile, don't you think? Like, we're pretty much where this all started at 11. But you're getting like 4-tick sweeps at points. Yeah, I was on the Sierra charts forum. I'm too lazy to go and find the link. I bet somebody probably find it really quickly, but like, I don't know. They've said some really. It's not the first time either. Some said some pretty wild stuff. It's kind of like the context of it is the thing that kind of makes me be like, "Are you okay, dude?" Right? Like, do you see how like this is maybe not the appropriate time to bring up your opinions on the end of the world and ballistic warfare and stuff? Like, It's kind of funny that I'm on one of those runs where that's something that just keeps popping up into my mind, and then I want to talk about. I'm ADHD, so something comes to my mind, I want to talk about it. And meanwhile, like, we kind of want to develop our indicators on Sierra charts because it's so highly requested. So here I'm kind of bashing them like, it kind of seems like the owners of Sierra charts are maybe losing it and are libertarian nut jobs. Oh, but by the way, can you give me a free version of Sierra chart so I can develop on your platform? The other thing I saw was that they said they were hiring, but they said that you cannot have the vaccine, which never seen that one before. I'm not necessarily, I don't know, I feel like at this point I'm kind of agnostic on the vaccine. Like, I don't have it, so I guess I qualify for that job, but I'm not like gonna hate on anybody that did. You don't seem to have severe ADHD. You don't seem spaced out or hyper, and I can follow your thoughts. Well, yeah, that's because 1, I'm on medication. And 2, I was diagnosed very, very young. So I've been able to overcome some of the most significant downsides. But you can, if you watch the stream here, you're going to see it where it's like, we just go off on all sorts of crazy tangents, right? And I just tend to talk about what I want to talk about. And I don't really exercise any kind of discretion whatsoever in terms of what should I actually talk about. Like, is this outside of scope for the stream, or, you know? Like, I would think that a smarter streamer would do that and be like, I don't know if we should talk about that because that might turn off certain viewers. So let's just leave that one, you know. I don't do that. You're saying that even the... So... Oh, guys. I don't even know where to unpack this one that you just pulled up. You took it when you were young, but you hated it. That probably means that you need it. If you take Ritalin and you don't have ADHD, then, like, you get euphoria, right? Maybe it was too tense and people don't like that, so it's not a guarantee, but still. Okay, no, so Jiwi says, yesterday afternoon, I popped into the Top Step live stream and I couldn't believe how popular the ICT guy is. He's like a god in the chat. Even Top Step presenters praise him. And Uzi says they probably get a ton of referrals from ICT. So we were having a conversation in Discord yesterday. Was it yesterday or the day before? Where somebody said that they were arguing with the people in the Top Step about it. So here's the thing that you got to understand about it, is that ICT is one part buy the dip and one part take on excessive risk. So when people are talking about it, like the, what is it that they call it? The silver bullet or whatever the deal is, right? When they're talking about the silver bullet, they're all focused on the strategy and the mechanics of the strategy. Okay. But they don't realize that a big part of it is you taking on excessive risk. You're generally speaking, these guys will take a relatively tiny profit and like huge risk. And so what happens to these people, and this is what people are doing on the combines over and over and over again, is you'll pass the combine, you'll trade the combine for a couple of months, you maybe even pull some money out of it, and then you blow the account and you have to start over again. So these people aren't actually making money in the long run, but it's enough for them to get funded, and that seems to be like all anybody cares about. So it wouldn't surprise me in the least bit to see people at these prop firms just seeing that, hey, a lot of people that seem to be following this ICT thing are getting funded, so maybe there is something to it. Well, it has nothing to do with any of the stuff that ICT teaches, and it's almost entirely down to the way that they approach risk. Right? And you can do this with just about anything, right? Just have your stop be twice as far away as your target. That's all you gotta do. Man, I'm not doing so well this morning with the coughing thing. Hold on. Oh, totally, dude. So, I don't know if this was COVID or whatever the disease is that's been floating around this winter. It causes inflammation even long after it's gone. And that kind of causes that cough. It sounds like a whooping cough, right? There's like nothing coming out, though. It's just because the passageway is inflamed. And it can be like 6 to 8 weeks. So I need to work out. That can kind of help a little bit, because working out can kind of reduce the inflammation. But I may need to get like an inhaling steroid sort of a thing. Oh man, I killed Seth. I shouldn't have mentioned. Okay, so let me see if I can game this out. Let's just say that on the S&P 500, I go and I risk. Let's try and do it like 500. Let's say that I will risk $500 to make $250. Okay. So the break-even win rate that you tend to get with a ratio like this, 2 to 1, okay, is your R factor. So your R factor is R equals 0.5. So the way that you calculate that is 1 over 1 plus R. So 1 over 1.5, which is what? It's like 0.8, right? Oh, it's 0.66667. Okay. 2/3, basically. Okay, so let's say that we take 9 trades. So we take 9 trades. 6 of them are going to be profitable. How many do we need here? I forget what the target is. Let's see here. Which one is it? 3,000. Okay. And the drawdown is 2,000. So 500 loss would probably be acceptable. Well, okay. So I'm gonna have 12 trade. I'm gonna have 12 and 15, right? No, 18. There's a 24. Well, let's just take them by 6s then. So I'll have 6 trades, and that will make me 1,500. Yeah, 1,500 in those 6 trades. Okay. But then there's going to be 3 that I lost the 500 on, and that would be 1,500. Okay. With me so far? Now, if we're able to set things up, so if I take 12 trades, so again, 12 times 250 is 3,000. Okay. So if I was able to get a win streak of 12, so I had 12 wins in a row, then I pass, right? Now, what are the chances that you can have 12 wins in a row? That's kind of hard. But what you could have happen is you could have like 6 wins, which is 1,500, right? 1 loss. Now you're down to 1,000, right? And then 4 wins. You're 2,000, right? 1 loss. Now I'm to 1,500. And then maybe I have 6 wins again. Okay. And now I'm to 3,000, right? Basically what I'm saying is that so if I was to do a large enough sample. So this one I did 10, 16, that was 18. That was 18 trades. I had 16 wins in 18 trades, right? 16 divided by 18. Oops. 16 divided by 18 is 0.88. Okay, so I got a 0.88% win rate right there, right? Now, if I lost 4 more times, then I would lose the combine, right? All I have to do is lose 4 times in a row. And I would be at the drawdown limit, essentially, right? So what are the chances of that? Actually quite high. So even though I might not have gotten it in that sample, over 10,000 trades, it's absolutely going to happen, right? So then that win rate is going to come down to that 0.67, right? So the whole thing is if you take on excessive risk to the point that you have a very high win rate, you can get lucky enough within a 2-week period or so to pass a combine. But you're not going to be profitable in the long run. Eventually, you're going to have a losing streak, and then you blow the account, right? But by that point, part of it is like you can only draw down 2,000. So like if we did from this point on, like we got funded and then we drew down 2,000 or something. Or let's say that this was the beginning of our funded trading, right? We made 3,000, we pull 1,000 out, and then we lose 1,000, 2,000, and then the combine is blown. But we did make $1,000, right? That's what people are doing. Does that? I don't know if like playing it out in like the way that these guys do this, if that really made sense or not, but if that, well, I think that it probably made sense, but I don't know how convincing it is to you guys seeing it play out like that. Because the thing that you got to understand is like if you look at it from the approach of like what are your weekly returns, right? Your weekly returns are going to be a distribution like this, right? And it could be entirely random. Like this could just be entirely random. That means there are going to be these tails and there's going to be these tails. And the issue is that like all of this is going to blow your account. Like maybe everything together is break even, but these are going to blow your account. So like trading this way, the chances of you blowing the account at some point are quite high, but the chances of you being able to pass the combine are also pretty okay. So you've got a bunch of people trading a strategy, getting funded on a strategy that doesn't really actually work. And what happens is all the noobs come in and see it, and it's like, well, he got funded, so he must know what he's talking about, right? And it just kind of perpetuates itself. And so you get this massive retail traders trading bullshit. So if 1,000 traders did that, how many of them would pass? I'm going to bet you that the pass rate for it is still below 50%. Right? So basically, so we can test this, right? How do you do it? Chance of run in X rolls or something like that. Run probability calculator, maybe. I forget the formula. I'm gonna find it. I'm gonna find it. Here we go. Streak calculator. Okay. The streak of lost wagers, the size of the streak, and the number of wages, the probability of losing. Oh, okay. So in a series of 10, what is the chances of getting a 4 trade streak with a loss probability of 33%? Okay. So over 10 trades, the chance is 5%. Okay. So we said, like the one that we did was 18, but let's say 20. What is the chances in 20? 13%. Oh, hey, actually, that's not bad. 50%. Calculate. Okay. So, like, if we're getting a losing streak of 4 in a row, that would, like, completely destroy your account. You lose the combine for you, right? The chances of that happening is actually pretty low. So I'm gonna bet that it's between 40 to 60% might pass with that. But the problem is, you go high enough. Like when we have 1,000 trades, now it's almost guaranteed to happen. You see? So you end up with this thing where you're actually reasonably likely to pass the combine, but almost guaranteed to blow the combine in the long run. Once you get funded, you're almost guaranteed to blow it in the long run. Does that kind of put the statistics a little bit more clearly? So another way of describing this is that, again, so you could say your profits are how much you make per win times the probability of a win, right? Minus a loss times the probability of a loss, right? And we're going to say that in an efficient market, that overall, that comes out to 0. So you can go through and you can do all this math and everything. We can change the probability of a loss to be 1 minus the probability of a win, right? Winner, loser, probability of a win here. Okay. So then that is L minus LP here, and this is still probability of a win. Or sorry, this is WP. Minus L plus LP. Okay. And then what I can do is I can get WP plus LP equals L. Right. Factor the P out E W plus L. Oh, but then I also want to say W over L equals R. Why am I doing this? I don't know why I'm doing this. Basically, it comes to this formula right here. 1 over 1 plus R. Right. So I can come in and I can say if my win ratio is... This is like I'm all of a sudden I'm feeling tired and losing track of my thing. Okay, so you get this formula. Winner times the probability of a win minus your losers times 1 minus the probability of a win equals 0. So this, if we replace average winner over average loser equals R, then P equals 1 over 1 plus R. Okay? So, if my R is 0.5, that is my losers are twice as big as my winners, then P, so if this is R, then P equals 0.67. So 67% chance of winning on any one individual coin flip, right? The problem is that those winners will not be evenly distributed. So, and the winners will not be evenly distributed either. So we know that with these, if your R factor is 0.5 and your win rate is 0.67, then over a large enough sample size, our expectancy is what? 0. That was the assumption that we made here, right? But in between there, what are the chances that you get a streak that's enough to reach your combine target? It's actually pretty high. It's just that what are the chances that you're also going to get a run that hits the drawdown? It's also very high, right? So even though in the long run, your win rate should converge on 67% and the strategy can be completely random, within that, there's enough variation for you to still pass a combine. Maybe I should program something like that where I can, like, you know, just randomly say whether you won or lost and add 0.67. I'll program that in Python. I don't have enough time in the stream. I'll do that tomorrow. I kind of think that I got like so deep in the weeds because you guys aren't saying stuff anymore. But yeah, it wouldn't surprise me at all to see guys at like Top Step, to see so many people coming in and passing the combine and going, oh, well, it must be a good thing. And then you don't want to talk against it because everybody hate you. But I'm just telling you, the strategy doesn't work. We've back tested it. It doesn't work. It's not a good strategy. You're interested in programming, you should brush up on Markov chains? No, well, I wouldn't just going to do it on a oh, actually maybe I don't need to program it. Maybe I can do what do we call this? Monte Carlo trading simulation. Free tool from Forex Signals. Go to calculator. Okay, so our initial balance is going to be 2,000 because, no, stop that. Fuck. This is going to be 2,000 because that's what you are allowed, right? Risk per trade is going to be 0.25 because we're going to risk 500. Okay, winning trades percent. 67%, break-even trades 0. take profit / stop loss ratio is, I think, 0.5. Or was this risk per trade? Maybe it needs to be 25, like that. Oh, that's kind of curious. Bum, 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 bum. Maybe this needs to be 2 like that. Oh, okay. No, it is. I got it right. 0.5. Simulate returns. Okay, so when you look at these, right? Basically, oh, is this doing it by day? I don't know. What we got to do is, I think this isn't quite doing what I want. Average number of trades per month. Let's like really increase that. Total months, 12. Okay. So the reason I'm a little taking pause here is because I should see like bigger jumps and falls in here. So I think that I've got something wrong. What if I just say that's 1? Oh, sure. Okay, so oh, that one doesn't make much sense. Oh, it's because, oh, that's weird. There's some things about this tool that I don't understand. Where is it coming from? There we go. Like, where's the freaking start of it? So one of the issues is that I don't know if this thing is like what the, you know, the units are in there. But here you get all of these things. It's like, how many of them get to 3,000? Okay. Actually, a lot of them get to 3,000, right? Everything from here, these are all like winning combines, right? And then anything that goes below here, these are all losing combines, right? And like the further on you go, how many actually stay above that, right? You see how it's darker down here? Right? Less and less and less of. There's going to be some guy that's like super lucky and has made 50% now. He's made 50% over 2 years or whatever. But most people busted their combines, right? I think we can get a better Monte Carlo simulator than that. Go to trade.com. Retool. Go to calculate. Oh, it's the same thing. There's no... Well, I don't understand what that number is. Is that 0.5% or is that 50%? Because what I would like it to be is like 25%. But then you get that sort of a thing where it's like, okay. Maybe that actually is what I want, and it's just like that the, you know, the simulation is so screwed up that I can't see, you know? 2,000 risk percentage per trade. What if the risk percent is just 5? Okay, maybe. The best. Well, I think that this is how much of my capital do I put in per trade. So this is where it doesn't completely match our use case because, like, let's say that you're going to trade one contract, right? Then the percentage risk that you're taking of your entire portfolio will change over time, right? It's not even. This is why like things like a momentum strategy where you do like how much of your portfolio you're risking on any one individual play, and you know, adjusting it based on the volatility is a really, really key part of a momentum strategy. But if you can only trade one contract, then you can't actually size yourself appropriately. And so those strategies, you kind of have to have a certain amount of capital to work with to begin with, right? But that's why I was kind of like, well, okay, what if we just had $1 million? What if we had $1 million and we were risking 0.1 per trade? That should be about 1,000, right? Okay. Well. The scaling's not right. I need to do it on my own where I can, like, you know, get the graph to be zoomed in the way that we want, you know? Monte Carlo Python. I'm just gonna write it myself. Maybe tomorrow, or maybe I'll do a practice sort of a thing, and then I'll do a thing. I'll make a video about it. And I could make how would if I turned that into a video, what would we do? How traders pass combines with losing strategies? Something like that. Like, what would be... This is a video that I've tried making many, many times, and I just feel like I'm not getting through. Like, too many people don't see it, don't understand it. It's got to be something that's like, okay, next time somebody goes, oh, I want to do a combine. And their friend says, no, you shouldn't do combines. They're not, you know, they're not advantageous to you, right? They're really just taking your money and you don't get much from it. And then they say, oh, well, but I know this friend and he passed the combine and pulled money out of it. Well, okay, I guess go and use the strategy and do it. Now, I've got to show you that, you know, them people passing the combine is, you know, exactly what they want for you to get suckered in. Man, I feel like I'm like really stumbling over my words and not doing a very good job of making this point. I can start making a bunch of TikToks about it. That's one of the best ways for me to like judge how effective the argument is. We're going to say let iterations equal 10,000 let win rate equal 0.67. Let winner equal 250. Let loser equal 500. For I equals 0, I less than iterations, I plus, I can't even remember the correct Python syntax. It's been too many months since I've done Python. Okay, so I do that 1,000 times, and then I say, what it would be Python random. Oh, yeah, I'll just get a random number. This is what I'll do. Generate pseudo-random numbers. Nah, I don't want to do it like that. Let's... random.rand range between 0 and 1,000. Roll equals if. Oh, okay. And then also we have to say profit equals 0. Start there with profit 0. And we have to do another for loop, and we say for I equals 0, I less than. So let's have iterations and simulations. Let simulations equal 10,000. Okay. So this one will be simulations. And this one will be J equals 0, J less than iterations, J plus roll if roll is greater than 667, then profit equals profit minus loser. Else, profit equals profit less winner. And then, right here, I'm going to have to say series equals an array of some sort, right? And then I say series of J equals profit. And then at the very end of all of that, then I'm just kind of doing pseudocode output series to a file. Okay. So now at the end of that, I should end up with a file that will be a comma separated list of the profit and loss across trades for with like 10,000 lines. And then I can go in, I can like graph it. Right. And I can tell it, oh, I can also say something like if, if profit is greater than 3,000, then winners, pass. So let's have some little stats up here. Say passed equals 0, failed equals 0. If profit is greater than 3,000, then pass. I also have to come in here and I have to say, oh, this is where we have to say, no, those ones have to be up here. Passed equals 0. Failed equals 0. Right. High equals 0. Okay. And then let's not call it, yeah, let's just call it high. High. If high is less than profit, profit equals, or sorry, high equals profit. High equals profit. And then we can say, so that's what gives us the high water mark. And then we can say, if profit is less than, or sorry, if high minus profit is greater than max drawdown, failed plus equals 1 break. Right. Let profit, let's just call it target. Target equals 3,000. Right. Maybe I can just say, how likely is it, how are you to pass a combine? Anyways, so this is pseudocode. I need to go back and remember Python syntax a little bit now, because I think what I wrote was mostly C#. But I think it's time for me to get going, guys. Thanks for sticking with me here today. Yeah, a quieter day because of the meeting and everything, but what do we have tomorrow? There is the key piece of data tomorrow, right? Is it like GDP or retail sales or consumer sentiments? That's basically it. Yep. Okay. Well, I'm gonna write this and maybe we'll make a video out of it. Hey guys, thanks for sticking around. Bye, Paul. PS. See you tomorrow. In the meantime, stay excellent, team.